Good evening. Sorry, noise upstairs, but good evening. My name is Daniel Young. I'm the owner and founder of Adaptive Perspective and the Adaptive Perspective social media platforms. And I am back with another strategy session on using closed-end funds to improve our investing. So this is an unedited video. Who knows what you'll hear in the background as I film these in my house? Who knows what I'll hear in the background as I film these in my house? I am not a financial advisor. I am a financial strategist, and I don't speak like the herd. I walk in limited company and sometimes I walk alone. And why the raw video? I like raw video. I like the ultra transparency of it. You get to see all my mistakes and I get to fix my mistakes in real time. And honestly, I just like it. So I'm gonna try something new here. Normally, I include a lot of background strategy. I include a lot of market update, strategy, projection, our overall stance using closed-end funds. I do all of that, and then I get into the picks for the week. And I'm going to attempt to break that out into different videos. I need to make an updated video on why we like closed-end funds and why I think they're a better investment platform than single stocks. I need to make a strategy video that gets into the current overall market situation, but as well as the undertones in the market. And I get that that'll change a little bit week to week that I can talk about on these videos. But the bigger um, overarching strategy of bonds versus real estate versus consumer stocks versus whatever else, um, that might change month to month, but it generally doesn't change week to week. So I'd rather, in the interest of trimming up videos, yes, but also just instead of saying the same thing over and over and over again every single week, it's much easier, I think, maybe better to write and then film a strategy video that I can reference on these videos and then not load down or weigh down or prolong these videos with all of that other strategy. I think it's important, but I also think it allows me to streamline these videos. So this week, I'm really just going to jump into the closed-end fund picks. I'll talk about a little bit of strategy, but not like normal. Uh, but we'll get into the picks in general, and then talk a little bit, and then wrap it like normal. So I've got several tabs up that you'll see, but such is the effect of transparent video. Let me see if I can share screen again. My Zoom page, which, yeah, my Zoom page and my script. But this is the closed-end fund master. And it's already been sorted by discount and then by target. And we're going to take this top group of triple targets of triple asterisk and drop it into this empty spreadsheet and start sorting. Too far. So they're all historical discounts. They all belong on the list. Discount at this point is important. Yield is important. We can shorten. But what we're going to focus on cleaning up first is we still want monthly payers. So I can make a case for these three, but we want monthly payers. So now, historical discount. So historical discount, they're on the target list. They pay monthly. Now we can actually get into the yield. So we want 9% greater on yields unless there's a good reason for picking something else. And it's going to be kind of the same thing as what it's been. to be quite honest. Um, but I think at this point, let's see, HFRO stays, it's the greatest discount. I also think the fears on the fund are oversold. Consumer, I guess we're going to have to talk strategy for a little bit. So what's the current strategy in picking funds for this week? Same as it's been for the most part. Real estate, yes. Um, what I need to get into on a separate video is why there's talk of a bond bull reemerging. And when bonds are popular, so are energy and utilities. So that puts us into like high fixed income, like high corporate bonds, bonds in general, and then energy and utilities. And I'm not generally a consumer sector fan just because I think it rotates through too much. I think you can make every category consumer in the sense that it's cyclical in some kind of nature. Uh, but right now, consumer is not my target. So these we own everything in dark blue. Green is just we track for any number of reasons. And that leaves us with this list. So we're going to rescale by discount. That's not what I wanted. There we go. So if we scale by overall discount, yes, HFRO is at the top because it's got the greatest discount. It's real estate and everything real estate. HGLB is a mix of things, as you can read. TEEF is all renewable energy that's not actually renewable. It's all dependent upon oil. MEGI is utilities. These three are bond funds, and they work slightly differently. Like FCO, like if you had like a pendulum of sorts, FCO would be on one side, giant fund, 2.3, 2.5 billion in assets. CIF's on the other end with maybe 35, 40 million in assets. But they both do the same things, just primarily US investment or maybe super high US investment. Both have a really high amount of overall fixed income corporate bonds. Uh, but on it's I debated on how to do this video, to be honest, of what to leave on the list and not. So quite honestly, you can like any of these things are great buys if you're just buying them. You just got to realize that the bond market is up and utilities and energy are up. So you're paying more now than you would have maybe 6 to 24 months ago when you should have bought bonds the last time. So if you don't own anything, like if you don't own anything on this short list of things, you're getting a great deal everywhere. It just kind of depends on your overall strategy and your individual portfolio. All three of these are great bond buys. That's a great utility buy. That's a great renewable energy. Really, it's a investment. It's an indirect investment into oil because all of their investments require oil in order to be made or maintained or installed. Um, HLB is a nice uh, mixed fund. It's not a composite fund. That's not the word I'm looking for, but it's a great blend of investments to where you do get some bond investments, but you also get real estate and energy and utilities. And you get to, it's not portfolio in a can, but it's kind of the same idea. And it ticks a lot of boxes for this current market. And then HFRO remains low. And I pulled up the top four up here. So, I mean, from the start of the year, really a little bit more. If we go from, we'll go like year to date. HFRO, their fund has increased in value, and yet their stock option or their stock price, stock value has fallen. I think it's still because people don't understand why the company switched between bonds to real estate, but they are heavily like everything invested in real estate. So the more their square footage comes online to either gain rent or be, bought out, however you want to say that, their value will continue to go up. So quite honestly, I'm happy to profit on everybody else's fears. Uh, the discount or the dividend has stayed the same as the price has fallen. So that means that your overall distribution, your overall dividend rate's gone up. Uh, but they cut the dividend in half. I mean, back in January. So a dividend that has the potential to increase going forward as more square footage comes online to be rented. I like that possibility. I like that potential. HGLB. If we look year to date, not much has changed really, but compared to overall value, I mean, it has the potential to go back up just based on need of utilities. TEEF is a pretty relatively new fund. Their dividend was higher when they started. You get COVID, all the bond market or the short-term interest rate pricing. We go year to date. General climb up, but overall, not really back up to pre-COVID. And the fund changed a little bit, but not really back up to where it should be. But it's also a term fund. So if you buy it now, I mean, yes, you're buying the discount. You buy it now, maybe that goes back up to what it used to be. 105? I don't think that's right. 0.1085. Maybe the dividend raises back to what it used to be. But when the fund sells, it will liquidate at the NAV expense or at the NAV value. So you buy it now at 1270, whatever this number is when the fund ends or the term period ends, you're getting the value added back or the difference between this buy-in and that buy-in, uh, which is a neat concept. Uh, Maggie is all utilities. I did not pull up Maggie. Interesting. What happened to ERH? ERH because of the yield, 7% yield. This is generally higher. It would boost your yield to 8.4, which would be, I think, 7 times the current dividend value of the S&P. But it's still not that 9% yield we're going for. It's also considerably higher than it was about, well, say about a year ago. And their distribution fluctuates considerably. And it's back on, I mean, it looks like it's scaling back up, right? But honestly, it's too inconsistent for me. Maggie itself is honestly a little too much of what I would rather pay. So if we're buying anything on the list, I mean, we already own everything in blue. Bonds and energy are more costly now than they were 6 to say 24 months ago. Um, all three of these are all three of these would raise our average. This would raise our average, but it gives the best all around picture of like it ticks multiple boxes. But honestly, if we were buying tomorrow, I think I would still buy HFRO. And I get it. The overall share volume or overall share value has dropped, but not all their square footage is online. And I've read articles, I've read the data about fears being oversold, and they're making their payments. They're doing the stuff. It's just for whatever reason, people have lost confidence in the fund. And quite honestly, I'm okay with buying their fear. Uh, we initially bought HFRO low, but we did not buy it this low. Um, and we just bought another 100 set pack of it maybe 2 weeks ago. And yes, this is our portfolio, but yeah. 24th. So about 2 weeks ago, week and a half ago, we bought 100 back. Uh, the Fed just ready, the Fed just adjusted rates again. Um, you've got more overall earnings reports coming out next week. There's the up and down choppiness post-election. Uh, I don't necessarily have a game plan to buy anything this week unless something crazy happens. But we'll give it a week or two. And I still make the videos week to week, but we'll give it a week or two, see what we want to buy, and then go from there. And if it ends up still being another 100 pack of HFRO, then it ends up being another 100 pack here because I still think people's fears are oversold. So increase in share, yeah, increase in share price, increase in dividend, increase in yield, a shrinking NAV, right, or a shrinking discount window uh, would benefit us greatly. So honestly, it would benefit everybody, anybody greatly, uh, depending on, I guess, depending on when you bought the fund. But I mean, I would love to see this go back higher. So I'm quite okay buying on somebody else's fear. Let's see if I can shrink this window again. There we go. Uh, so that's all I got. I mean, hopefully considerably shorter. It's got to be considerably shorter because I didn't get into all the strategy behind all the decisions. So if you like the content, consider subscribing to my channel and hit the like button because it really does push out videos. If you want to find me day to day, I have moved my content off of Facebook. It's the pages are still there, but I'm primarily on Instagram under the same handle, Adapted Perspective. And I am attempting to learn that system. And I'm posting about everything. I've got the Navigate Your Finances information with the 12 steps to financial freedom. I've got the weekly meme reviews, these videos, along with scholarship information on Saturdays. And the scholarship information is completely, I want to say it's completely open source in the sense that there's no membership, there's no fee, there's no cost. I don't have a spam list. Uh, you click the link and you access the information. So tempting to put everything under the same umbrella and manage everything under the same umbrella and integrate everything under the same umbrella. And we're going to see how that goes. So if you want the entire system that gets you from where you are to real financial freedom, not just these weekly closed-end fund picks, then come check out my Instagram handle at Adapted Perspective. So I hope you all have a great week, and I wish you well in whatever your endeavors are for the week. And if you want to chat during the week, come find me on Instagram. You can comment on here. That's fine. Uh, but other than that, I will see y'all on another video. It's just you got to remember whatever it is you're up to, whatever it is that you're doing financially, has in life. Manifestation ideology is nice in the sense that you think about stuff, but nothing's going to change unless you actually do something about it. So whatever it is that you want to do, whatever dreams you have in front of you, get out there and make it happen. See y'all later. Bye bye.